Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Monday, January 16th, 2023. I hope you guys are having a nice long weekend, and let's get started. I'm just showing the SSO chart here because this is the instrument that we use to get long the market. One was when we hit the October low that we were anticipating, and then when we jumped in right around in this area as well. This took a little bit of time, but eventually it came up, and we made 10% on this trade. This was closed out. There we're now cash, and now the next trade we're going to be looking for is going to be on the downside, and we're going to be looking to trade the SDS, which again that goes higher if the S&P 500 goes lower. So here are some of the reasons why we're looking that way. Is One is what he shared, the low date that he's anticipating. Uh, Heading into the February time period. And here you can see we have sell signals in place here. We definitely have enough waves to get up to call this complete. And we're heading into this, major resistance area here. And what really, but the main thing is you're going to need to see the bears get the S&P below the 3950, but really more importantly, it's going to be down below this 38 90, 3880 level. If that happens, that's when we start seeing momentum really accelerate on the downside. And I'm looking for, probably a test of the 3800. It could go lower than that, but then the next swing trade is going to be on the upside. But right now, very overbought. We are at resistance. If the bulls can continue higher on Tuesday when the markets open back up again, we'll be looking for possibly around this 40.53, where we'll then start layering in the trade on the SDS, meaning that we'll be looking for the market to go down and just using the S&P 500 as our, say, eyes for the trade. Again, if the bulls head above this, then we're looking at a move up to the 40.52. And the really first support area for the that the bears need to get through is 39.50. But more importantly is below this the 38.90, 38.80 level, and that's when we would see really a changing of the guard from bullish to bearish. We're still in trade mode. This is not. I think the next swing trade is probably going to be to the upside, but we are looking for some backing and filling to take place. Starting as soon as tomorrow. It's not guaranteed. We're just know when the low date is, so we build our positions at resistance for the market to come down. We're really looking for that 100 to 200 point S&P move for our trades, and using the SDS or SSO. If we take a look at the 15-minute chart here, you can see we have bearish divergences in place. It's You can see this is that support zone that the bears really need to get through to get any momentum going on the downside. But you have the 50-day moving average that's right at the 39.76 level. So this is where the bulls are going to try to defend. If they lose that, then we should see a move coming down into that 39.50 level that I've been talking to you about. And then we have the 200-day moving average at 39.25. So you can see the support zones that the bears need to get through. They got their work cut out for them, but we're seeing the majority of the people, getting pretty bullish on this market when they were extremely bearish on the market here. Where everything is in place right now, well, it's getting in place for a quick move to the downside. Let's see what plays out tomorrow. Enjoy the rest of your weekend, and I'll talk to you guys in the morning.